Hello, traders. It's amazing to have you all here. Welcome to another Trading Psychology series session. And today we will talk about the famous FOMO, something that all of our traders are struggling with. Traders and non-traders. Actually, a lot of people struggle with FOMO, and the topic is FOMO. Now, I also want to announce that during today's session, we will be giving away 10K challenge accounts. Okay, 10K challenge accounts will be given to you guys today during the session. However, at the end of the session, I am going to tell you how to enter in order to receive the account. But now let's focus on the topic, and the topic is FOMO. This is something that traders and non-traders are struggling with, but particularly us traders. It is that idea that you're missing out on something. And when you miss out on something, it actually psychologically makes you want to engage in more risky behavior. And this is, of course, problematic for us as traders. So we are going to dive deeper into this topic, and we are going to understand why certain things happen. So I want you to think about everyday example. Imagine you are scrolling through Instagram and you see that your friends have an amazing party, or are traveling to Bali, or are attending a concert, and you start feeling left out, even though you were fine before and you did not want to go, but you saw social media posts, you saw stories, and you start questioning yourself. Why didn't I go? Am I missing out on the best time? You may even change your plans and cancel what you meant to do in the quiet evening at home and rush to join your friends. And then you join your friends, and then you realize, actually, in the first place, I know I did enjoy. I just spent a lot of money. I didn't really have enough good time. On social media, it looked all great and fancy, but actually, I did not want to be here. So let's think about the psychological mechanism that was at play here. It was the social comparison theory, which makes you compare your experiences to other people's experiences, even though if you think about online content, everything is curated about what people post. Now, let's think about trading, because that is where the problem occurs for traders and when it comes to FOMO. Imagine you're a trader and you see a huge pump on Bitcoin. You didn't enter the trade because, one, maybe it did not meet your strategy. Two, you potentially just moved or you missed the trade. So your emotions start kicking in and you think, what if it just keeps going up? What if today we are going to reach the all-time highs? And you start rushing into the trade, and you rush into the trade without analysis, without any risk management, because you feel like you are missing out on the lifetime opportunity. You enter the trade, you're in the trade without thinking about it, price starts pulling back and you are going into a heavy drawdown, or you start just losing money, and then you enter again because that fear of missing out is still sitting in you, and you think, okay, I am going to enter again and I want to be part of this pump, of this trade. So then I can see it. Then you go on social media and you scroll through and you see other traders go into that trade. So you add more positions. Boom. It happened. You lost your account, or whether that is master account or challenge account, or you blew your personal account, and you start feeling frustrated, anxious, and regretful. And you wish then that you did stick to your trading plan. So what is the psychological mechanism at play here? So we have the regret theory, right? You fear missing out more than you fear of losing money. So think about it. The reason why you enter trades out of FOMO is because you are more afraid on missing on the opportunity than you are afraid of losing money. And then, of course, the loss aversion that we discussed in previous sessions before. You panic about missing an opportunity rather than managing your risk. And this is the topic that we are going to talk about. And those of you who have just joined, Welcome to the Trading Psychology series. We are going to talk about FOMO, and during today's session, I am going to give out 5 10K challenge accounts. I am going to tell you at the end how to enter to win one of the accounts. Let's dive straight in to the topic. So let's think about what is FOMO, okay? And as it says here, is a definition that is got psychological roots, and obviously it affects your decision making and your logic. And then I'm going to highlight a few studies to tell you why FOMO affects traders, best traders, and also non-traders as well. So for traders, FOMO leads to bad trades, over-leveraging, abandoning your strategies, your risk management, and just wishing to be involved. For everyday life, it creates anxiety, dissatisfaction, and impulsive decision making. So again, we have here, when the FOMO gets increased, your logical brain switches off. And when you experience FOMO, specific trigger for FOMO in trading and also in life, but in trading, is social media. You see other traders posting great trades on Euro USD, on GBP USD, on Bitcoin, on gold, and it's usually 1 to 20 risk reward ratio, 1 to 10 risk reward ratio, or they will post all of a sudden a reward from a prop firm, and you think, oh my God, it could be me, or look, everybody is buying, I should be buying as well, but you miss the move, and you start rushing into it. And in both cases, emotions overpowers the logic, leading to regret. But again, your fear of missing out on something is stronger than your fear of actually losing money. That's how strong it is. So FOMO, essentially, from a psychological standpoint, is a cognitive and emotional response where traders feel compelled to take impulsive trades due to the belief that they might miss out on a lifetime opportunity. That is all that you are thinking about. So British psychologists defined FOMO as the pervasive apprehension that others might be having more rewarding experience than you. So I've given at the start an example of people going to restaurant, Bali, or this or the other, and the friends would be having kind of perception of FOMO and thinking, oh my God, they're having so much time, I should be there. But this is the same exactly for trading. You think that other traders that are posting day trades, which usually traders only post their winning trades on social media, and you think they have more rewarding experience, that they are making more money in the markets, that they are more successful traders than you, that they are amazing traders, that their strategy is amazing, and you start following them, and then you start entering on trades. And because you think that particular trader might be a good trader, because they are buying, you are buying too, except that your entry into the market has nothing to do with risk calculation or logical thinking. But you do that because you compare yourself, and then you think, if they can get it, I can get it too. So you start chasing trades, ignoring your risk management, impulsive decision making. And behavioral finance theory shows that traders don't always act rationally. Emotions like regret, excitement, and greed override logical analysis. And that is for professional traders. That is for traders who sit in banks, in trust funds, hedge funds, etc. What about you? You as a trader of your own that decided to change their life, that decided to take it upon themselves to do something different and extra, to break out of that 9 to 5 system. And you go into the markets and you will have even more emotions staggered that are going to trigger you because you are experiencing more pressure than anybody else. So this is something that you need to build awareness around. Now we go to the next slide, and we're going to talk more in depth about the neuroscience and FOMO and how studies show that FOMO activates the same brain regions as addiction and survival instincts. I'm going to repeat that because this is absolutely necessary for you to know. Neuroscience. Neuroscience is literally the core of psychology. There is a reason why we behave the way that we behave as human beings, why our brains are responsible for certain things that we do and we are functioning as human beings. And studies show that FOMO activates the same part of the brain that addiction and survival instinct would. Now, let's think about it. Survival instinct makes sense. If we think about coping mechanisms, we are creatures as people where we observe. We observe what is going on in our environment. This is one of the reasons why we mirror someone that we talk to. We start speaking similar accent. We start saying similar words. We start mimicking the body language, because that's what we do as humans. This is how we kind of incorporate ourselves into different environments, and that is only natural. And because we do that, this is why FOMO has such huge impact. When you see traders, especially when you're in the same communities, if you are in our Discord, and when you see other funding pips traders, when you see traders who are doing challenges, when you see traders who have master accounts, or traders who have received their rewards, you want to replicate their behavior, because that is your survival instinct in a market, where you want to replicate what is happening in their environment to receive the same rewards. However, there is another factor that we need to think about, the addiction factor. That because this is something that is going to release the dopamine in your brain, because it will feel like you are protecting yourself, because you are trying to equalize to the point where you will receive the same rewards as other traders, and therefore you're going to replicate, and therefore the reward is coming. However, that can have actually addictive stance in it all, because you will repeat the same cycle over and over and over again, because you have an idea that the other person is doing better than you. But we are going to unpack that and why you think what people are doing. And most importantly, I'm not just going to open up the topic. I am going to tell you how to deal with FOMO and how to actually help yourselves. Because as traders, I could be talking here till tomorrow. And if you do not action it yourself, it will never happen. So if you just joined, I want to welcome you to our Trading Psychology series. And I also want to tell you that today we will be giving out 5 10K challenge accounts. But at the end of the session, I am going to tell you how to enter and how you will be selected to potentially win your challenge account. Okay, let's continue. Social media and unrealistic expectations. And this is where many traders actually hang out in social media, and that is only natural, because as traders, we are lonely. And if you are lucky that you are potentially working from home and you get to trade as well, then potentially you are spending a lot of time on your own in front of the charts whilst working. Maybe you are a full-time trader already, so then even more so, you are spending a lot of time on your own in front of the charts, staring at the charts. Now, if you think about trading as a business, you are your own person. You as yourself have to be your own boss, your supervisor, employee, employer, colleague, and you need to be supportive, self-critical, and disciplined. You have to be all of the rainbow of emotions and disciplines and things that other person would expect from you. But you have to be all of those things for yourself. And this is one of the reasons why traders hang out on social media platforms, on Discord communities, on Twitter/X, on Instagram, on TikTok, and a lot of other platforms. That is to connect with like-minded people, because for me, 100%, all of the traders are amazing people, because those are the people that are not scared to take a chance on themselves and kind of move forward and think, do you know what I'm going to do? I'm going to do something other than 9 to 5 job, and I am going to move and try to achieve something else. So to me, that's already you're an amazing person for wanting to do that for yourself and for your loved ones. But you are on your own. So you seek for those communities. However, what you don't realize is that everybody on social media creates a perception of what trading is, perception of their profit, perception of their winning trades, perception of everything and what kind of trades they take. And that creates for you skewed perception of success and what success should look like. So for you, you may see the traders that you are following that they always get very high risk reward ratio. However, what you may not know that before they took that high risk reward ratio, they took 4 or 5 losses beforehand. Or maybe what you don't know is that they blew their 2 challenge accounts, and on the third one, they'll actually won that one trade. You don't know the backstory because people on social media will curate their content to showcase the best side of themselves, which is only human, because if you think about it, as humans, when we interact in a real life world, we interact with people and we usually showcase the best side of ourselves. We never say, I am bad at this. We always try to present ourselves to others to make, obviously, this good connection with people, right? However, when you see all the time certain traders receive 1 to 10 risk reward ratio, 1 to 20 risk reward ratio, your perception of what trading success is gets skewed. And I remember that myself as a trader when I was starting off and I was following some of the gurus because I knew no better. And all I could see is them holding those big trades, you know, getting in at the tip of the iceberg on GBP USD, somewhere at the supply, and holding it for 200 pips down and this and the other. And I was thinking, oh my God, this is what it means to be a successful trader. And I was thinking of myself, and I'm only going for 1 to 2 risk reward ratio. I should be better. I should be having higher tolerance to risk. I should be holding my trades for longer. And that was making me lose, because that way, I was actually not following the path of consistency, but perception of what I thought the success is. So the more time you will spend on social media watching traders and others succeed in inverted commas, that will lead you to impulsive decisions and thinking irrationally about success. So at the same time, loss aversion, if we think about the research that shows that people feel the pain of losing money more intensely than the joy of winning. Let me repeat that again, because this is really important. Research, scientific research shows that people feel the pain of losing more intensely than the joy of winning. Can you see the problem here of us as traders? That when we actually win and take profit in a market, the satisfaction is never there, because you will always, if you don't change your perception and start training your mind and your willpower and your psychology and your mindset, you will always engage in risky behaviors, because it's never enough. It's never enough. You may feel FOMO because you did not enter the trade. You may feel FOMO because you have not been watching 10 pairs at the same time and there was opportunity here. You may feel FOMO because you exited your trade too early. You may feel FOMO because you've decided to put your trade at break even and then it hit break even and went to your profit. There might be so many different factors of why you might be experiencing FOMO as a trader. And you can feel FOMO about everything. And that is newly researched area. And for about 10 years now, it is acknowledged, and it is in British dictionary, and it's acknowledged by scientists. And soon it will become a mental health condition, because people really do go into extremes. And us as traders, we are extremely exposed to it. Now, what you have to think about as well is the pairs that you are choosing to trade, because too many choices may equal to more anxiety. If you think about Netflix, and when you sit and you think, okay, we are going to watch a movie today with your family, and then what you guys end up doing? Searching for a movie for an hour. No, not this one. First of all, too many opinions. Second of all, too much of a choice. Under each category, comedy, horror, this or the other, you have plenty full of choices in the markets. You can trade forex, crypto, futures, stocks, And even in forex, there are major pairs, there are other pairs, minor pairs, this or the other. And some traders want to catch it all, but that is not your job. What will make you a profitable trader is, as I said in our last Friday session, to take those small pieces at the time. That is where your consistency lies. But when you start seeing everything and everywhere, what is going on social media and what people are doing, that is going to create pressure on you that you are not doing enough, and that will lead to impulsive trading. Now, I want you to really think about realistic expectations for yourself as a trader. Now, I want you to really think about what it is that you expect from yourself as a trader. So think about the big goal and what you want to achieve, but at the same time, what are the daily goals? What are the things you need to do on a daily basis to achieve that one big goal? Okay. Now, again, if you just joined the session, we are doing trading psychology series. We are talking about FOMO today. And during today's session, we will select 5 winners for 10K challenge accounts. At the end of the session, I am going to tell you how to enter to be potentially selected as a winner. Now, let's continue talking about how a trader sees someone, on Instagram posting a 10K profit screenshot captioned "Easy money, trading is simple," or "Not a bad for a Friday, not a bad for a Tuesday payday," and you don't realize that probably that person had a losing streak or they took excessive risk. And those are the things that sometimes you as traders don't think about, and that spirals into frustration. Why can't I win like them? Why can I not generate such profit as them? And that is going to, of course, lead you to do things that you should not be doing. So you need to, now we're going to move into the impact of FOMO into trading, and then also how to fix it. And how do you think we fix it? Control emotional trading. Stop comparing yourself to others. Accept losses are part of successful trading. This should be your mantra. Losing in the markets is okay. It is okay. You also need to limit your market exposure and selection. You don't need to be involved in everything, and you don't need to be the first one in the markets, and you don't need to trade every asset and every pair. Those are the things that I really want you to take away from this session and kind of, analyze for yourself over this weekend. Let's move. So, the impact of FOMO on trading performance. Common trading mistakes that are driven by FOMO. So, let's think about it. How does FOMO ruin trading performance? How does FOMO ruin trading performance? By chasing trades that leads to poor risk-reward setups, overtrading, increasing the exposure to the market noise, emotional exhaustion and losses. Traders enter impulsively, ignore proper risk management, and often over-leverage. What all of that leads to? Emotional burnout. Emotional and psychological burnout. FOMO is going to drain your mental energy, and your concentration is going to go down, your frustration is going to go up, and you are going to be in this cycle of regret, self-doubt, and frustration. Now, as traders, when you experience that, that can have a knock-on effect, because there is one thing that is going to happen, and that is going to lead onto poor decision-making process, like a domino effect, and that may carry forward onto the next day, the day after, and after that, and after that, and after that, because that one behavioral mistake where you will allow for FOMO to take over may cause you lose the account. And when you lose the account and you cannot buy another one because for whatever reason, then this is why you are going to end up feeling like you're a failure as a trader. And that's not fair for any of you to feel like this, because all of you started to do trading and educate yourself about trading out of wanting to achieve more, out of wanting to break out of 9 to 5 and wanting to succeed. So all of you deserve a pat on the back. But because of the perception that you follow of what trading should be and what it is not, and the pressure that you are creating for yourself and the trades that you end up taking and what you end up doing and the consequences that it has, leads you to the point of wanting to give up and feeling extremely frustrated. So, of course, that will make you overtrade, right? Because as a consequence, you will start overtrading to make up for the losses that you took during feeling the episode of FOMO. And that is going to build up on the emotional and psychological exhaustion that you have experienced from FOMO. And this is where you may frantically start trading and either give all of your money back into the markets or take losses too quickly. That is one of the first consequences of FOMO. When FOMO takes over and when you actually start engaging in the market in an irrational manner and you feel frustrated, you will start losing too quickly for no reason, too tight stop losses, over leveraging, and that's why your stop losses are too tight, and this is the reason why you are rushing into the market, and that is going to have a small movement, or the market may start ranging, or whatever may happen, and you just lose it. Not because you're not a great trader, it's because of the emotions that you are experiencing as a trader. And obviously, that's going to lead you to low quality setups, because then you will feel the time pressure on your shoulders. And that time pressure on your shoulders will tell you, take another setup, or do not miss on a setup like you did yesterday on that Bitcoin pump, as an example. So you're going to start catching every opportunity, just maybe, because it may happen right now. So instead of taking one trade a day, 2 or 3 or even 5, you will take 15 or 20. And you may make some money. You may lose some money. You may have some break-even trades. But at the end, you will lose money. Because that way you are teaching yourself bad behaviors that releases dopamine in your brain. Again, remember, even though it releases dopamine in your brain, the profits do not have as great of an impact as losing. Therefore, you're not that afraid of losing anymore, because profit doesn't feel that good either. And you just want to be involved in a market because maybe you're going to get lucky. And sometimes traders in the markets are more lucky than logical. And sometimes that works out, but that's even worse. In my opinion, that's even worse. When you are entering outside of your trading plan and you get lucky because there is a movement and you get profit, that's bad for you, because long-term, you're going to lose that account. Because you just taught your brain that breaking the plan is okay and you got a reward from it. So I really need you to pay attention to yourself and not to mentally exhaust yourself, not to emotionally exhaust yourself, and to really preserve your energy and to ensure that you will not be mentally drained, because that is going to reduce your concentration, and that concentration will have that knockoff effect of mistakes building on mistakes, and eventually what you are doing, you are compounding the losses, the frustration, the emotional damage. So what is the consequence? And I'm going to read out a few things that I've got here, but before I read out, I want to welcome everybody who has just joined. We are doing Trading Psychology series and we are talking about FOMO. If you missed the first half an hour of this psychology series, you will be able to watch it on YouTube later on. Also, I want to announce again that today we will be giving out 5 10K challenge accounts. At the end of this session, I'm going to tell you how to enter to be considered a winner. Now, I want to read out a few things and I want you to really think about it, whether this is something that you have done before. So, example, a trader spends 10 hours watching charts, scrolling through Twitter, Telegram, and Discord, constantly fearing they will miss out the next big move. So essentially, why do we start trading as traders? Usually because we have bigger dreams. Usually is sometimes it might be for people to earn millions and millions and millions, but a lot of the time is for people to own their time. Okay, majority of traders started trading to own their time, to be the masters of their time and of themselves. But in order for you to be the boss of yourself, you need to respect yourself. All right, now, because you wanted to free yourself and own your own time, you had become the prisoner to the charts. And that's what usually happens, where you will be getting overstimulated in front of the charts, trying to watch every single move, potentially even on a 1 minute time frame, and see, is it going down, is it going up, is it not seeing the bigger picture, and you exhaust yourself. And you just sit there like a prisoner in front of those charts. Next trade is going to come, next trade is going to come, and you exhaust yourself. That is going to lead you to experience clutter in your mind, to have too much information. When you have too much information, you will experience decision paralysis, which is, analysis paralysis, pretty similar. Because you overwhelm yourself with everything that you see on the charts, and also what you are doing, you're overstimulating and overlooking. And once you start looking at the charts and thinking, okay, maybe here, maybe now, eventually, by just looking at the charts over and over and over and over again, you will come up with a trade to take. You will come up with a trade to take. This is a guarantee. So you will miss a clear setup sometime, but then you will enter the bad setup because you did not follow your plan initially, and that is making you have the Fomo. And then you will take any setup because you are frustrated with yourself. So then you think, well, you know what? But the market should go up, so therefore I'm just going to enter. And then you think to yourself, why have I hesitated? See, I was right. And I did not enter the trade, but now I want to, and I'm going to do. And then you start just executing for the sake of executing. So what kind of emotions then you feel? And you know what? After you blow that trading account, we all know how it feels as traders. That deep sense and feeling of regret, self-doubt, frustration, disappointment in ourselves, and damage. And that damage is a psychological damage that we cause ourselves as traders. Because there are different examples and scenarios and why you might be feeling the way you are feeling when you see the price hit the take profit after you exited too early. But in trading, that is going to happen all the time. And what you have to train yourself to realize and understand that these damages that you are creating by breaking your rules every single day will compound and make permanent damage, and you will not be trading effectively. So what should you do? And I'm going to give you a few things. You need to plan your trade in advance, but not just entry. Plan your profit and plan the management of the trade. So when you come to the charts, and when I see Euro USD, I want to sell today. That's what I was kind of thinking. And I did. Euro USD, I'm selling. Okay, this is my entry. This is my stop loss. Okay, that's one job. Execution and stop loss. We are protected in a market. Okay, entering the trade. I don't anticipate how long the trade is going to take. It may take 15 minutes. It may take the next 3 hours. I have no idea what the market is going to do. But I've highlighted to myself that around a certain area, that is my profit target. And I don't want to sit through the reaction from that area. So at that area, I'm going to close my trade if the price is going to get there. Now, I also decided that once we get to the previous area, when there is a lot of demand and we also may see a smaller reaction, I'm going to go break even. Because then if the price turns around from there, because anything can happen, at least I've lost nothing for the day. And that is my plan ahead. Why do I plan ahead? Because whilst you are in the trade and you have not planned out your management, your exits, and what you are going to do in different scenarios, this is where panic sets in, this is where emotions set in, and this is where you start making bad decisions. Because then you make a decision based on an emotion which is not going to be logical, and you are going to review it afterwards, and that is going to just spiral into that bad behavioral mannerism in a market. So that's number one. Structured management, entry, stop loss, profit. Do you go break even? Do you not? Do you take partials? Do you not? You have to think about it all. You also have to accept that you will miss trades in the market. You will miss trades. And I told you before, and I'm going to repeat it again. You're going to take profit, you're going to lose, you're going to have break evens, and you're going to miss opportunities. Those 4 factors is what's going to happen in a market's guarantee. Unless you never go break even, then you will not go break even. But either win, loss, or missed opportunity. It's just the way it is. Risk management. What is your loss per day? How many trades do you take? All of those things matter. And the most important, in my opinion, not most important, but one of the most important when it comes to psychology, because you have to, in order for you to exercise good trading psychology, you need to control your environment. Limit your screen time. Stop overexposing yourself to the markets, to the charts, and stop obsessing whether it's going up or down, because whether you look at the markets or not, unpopular opinion, the markets will move anyway. Okay, the markets will move anyway. So don't obsess over it. Let it be. Let it be. And you focus on you. When you are sitting in the trade and you don't know what is going on with that trade, read, do something else, or work, do so many different things. If you are stressing over a trade, oh my God, is it going to hit stop loss? Is it going to go to the profit? That means you are risking too much. So all of those things you have to consider. All right, now let's move on to the next one. So how to train yourself to overcome FOMO. Awareness. Do you experience FOMO? That's number 1. 2, risk management. Limit social media exposure. And what I was talking about before about social media and how other traders will create FOMO because they sometimes post unrealistic results on social media. You need to be responsible for your social media feed. What do you see on your social media feed? Who do you follow? Who do you not follow? You are the creator of your reality. And I want you to take full control over it. Do not expose yourself to those people who are going to trigger you. Don't do it. I want you, after this session, go and clear out your social media feed. On Instagram, on Twitter, follow people that add value into your growth as a human being, as a trader. You should not care what profit they are taking. And even if they are posting 1 to 20, trust me, there is a story behind it. I personally, if I post my trades on Instagram, I do try to be as transparent as I can be. And I often say, entered this trade but took 3 losses before. But that is my trading strategy, by the way. Okay, so this is something that you need to focus on. You need to develop a process-oriented mindset where you track your own performance, not others' performance. On social media, you will be tracking others' performance and you will be actually more interested in other traders' performance and whether they took profit today or lost or this or the other than your own. So you need to define your clear criteria, clear personal goals, clear risk management. You need to have clarity on how you are entering, how you are exiting, how you are managing your trade. And you have to do all of those things and plan all of those things prior to entering the market. You need to understand the mindset you woke up in. You need to understand how you are feeling, what's going on economically, what's going on the charts, analyze it, and then plan everything that is going to happen ahead. Okay, so those are the kind of things that we have discussed. And here, I don't want to repeat myself with kind of building self-discipline and following your trading plan, because you know those things. And we discuss it in pretty much every episode of those series where we talk about what is important and how we open up different topics. So the biggest takeaway is for you to curate who you observe and to control your environment, and for you not to spiral out of control. Because remember that one event that is going to happen on the charts that's going to push you, due to FOMO, to take the trades that you should not take, that's going to have a domino effect impact, which then can spiral into losses for days, weeks, even a month. And that then will have an effect on your mindset, self-confidence, how you think of yourself as a trader, how you think of your success, whether your strategy is working. That's also, by the way, one of the reasons why you guys jump from one strategy to another. But most importantly, mental clarity and well-being, because behind every strategy, there is an executor, a trader. You are behind the strategy. You are responsible of how that strategy is going to be executed. And you need to look after yourself, because without you, that business does not exist. You are your only one employee, your only one boss. And you need to make sure that you are well mentally, you have good well-being, physical health, that you are focused, and you know what it is that you want to achieve. So give yourself check-ins, and this is where self-awareness comes from. This is where you need to ask yourself questions before entering the trade. Have that gap of control, because what happens is the interpretation. There is an event in the market. Like we said, we've given an example of Bitcoin before. The Bitcoin is pumping and it's moving up, and you think, oh my God, have I missed the opportunity where I could have, really get in a few thousand, or was that a trade of my lifetime, or what is happening here? And you start building that thought process, which is your perception of the event, which has potentially nothing to do with the truth, because there will be high volume days in the market often, whether that's on Bitcoin or other asset, it's going to happen. Markets move every day, whether you're watching them or not. So you need to give yourself that gap of control from the thought and interpretation of what is happening in the market to what leads to the emotion. If you are unable to actually control the thought and emotion already happens and you're already feeling angry or frustrated, that's still okay. It's fine to feel emotions as long as we are aware and understand what that emotion is. But the gap of control is between the emotion and behavior. The behavior is when you boom, click, buy or sell, buy or sell, buy or sell. But between the emotion, when you feel that surge of emotion hitting you, and we all do that. Us as traders, we experience high intensity emotions in the markets. When you get that surge of emotions, pause. This is your time to check in with yourself. Am I entering because of FOMO, or is this in line with my analysis? What is my emotion on a scale from 1 to 10? Would I take this trade if I didn't see others taking that trade? Am I chasing the price, or do I actually have proper reasoning and analysis here? Why am I taking a certain trade? So set yourself clear criteria. And this is what I'm talking about, the checklist. Only enter trades before the breakouts if you are entering breakouts. Limit your orders to key levels if you are trading at key levels. Limit your risk per trade, per day. And shift your focus from I could have, should have, would have got this to process-driven results. Because those results are the results that are going to help you grow long-term as a trader. Track your progress, set personalized goals, and long-term consistency beats short-term hype. Always remember this. And one of the key takeaways that I want you to have from here, that FOMO is not a trading issue. FOMO is a psychological issue. And FOMO requires self-awareness and self-management. And the reason why it requires self-awareness and self-management is because your strategy will not execute itself on its own. You are the responsible person for your strategy. And because you are the responsible person and you want your trading business to expand and grow and your entrepreneurial goals, this is why you have to look after yourself in all of those areas. Control your trading environment on social media and don't overexpose yourself to the charts as well. Stop chasing and let the setups come to you, to your levels. Do the analysis, set the alarms, get on with your day. Build confidence in your own strategy, but the confidence comes from seeing how the process is executed, giving you profit, rather than from you executing outside of the strategy, getting lack of confidence and blaming your strategy. It has nothing to do with your strategy, everything to do with your psychology. And now it's time for Q&A. It's been an absolute pleasure. And of course, we do have a giveaway. We are going to give out 10K challenge accounts after this session. So after I answer the Q&A, please come to YouTube or X to comment with any of your questions related to FOMO, to trading psychology, but I would really love for us to focus on FOMO today and ask me any questions. And at the very end, when all of the questions are answered, I am going to tell you how to enter to potentially win one of you each, but we are giving out 10K challenge accounts, and I'm going to tell you how to enter to potentially get one. So let me scroll through the comments. There are a lot of comments. It's beautiful to see. And let's see. Hey there. Hi, amazing. Okay, so just greetings. It's great to have you here, guys. Thank you so much for your positive feedback. It's been for the okay, so chart art is saying that's been me for the past year, slowly getting better. Your lessons have been valuable. I'm really glad that it's been valuable, and you're not the only one that has been going through that journey as a trader. It's unfortunately, but maybe fortunately, that all of us go through it. And I do believe that anything that we go through as traders, there is a purpose for it, because there is a lesson, to be learned. And in the future, you will understand why you had to learn that lesson, because potentially, the type of accounts that you might be managing, or as many challenges you will enter with funding pips or have the master accounts, you will understand why you had to undergo a certain journey to be a better risk manager or to be a trader that you actually wanted to be. So all of those things that you go through now are preparing you for the trader that you strive to be. And I know it's hard at times, but keep going forward. We have further questions. Hi, good morning. Another one, please give me a funded account. We will not give you a master account, but we will give you a challenge account, which 10K accounts will be given today, but I will inform you at the end how to enter. Okay, we have a question. FOMO is really common, especially when you are starting out. Focus on your own path. Fellow traders, you'll be just fine. You don't know how long it took and what took other traders to get their rewards. Absolutely. This is absolutely golden advice. And also, number one thing here for me is it's great to surround yourself with other traders and to create yourself a community and to have that supportive circle around you. But this is why I highlighted over and over again, you have to curate your social media and who you follow, who you speak with, and the kind of impact they have on you, because the things that you see will have impact. And I want you to really switch on that consciousness and really go into your social media feed on all of your social media platforms and see, does it add value? And if it does, to which area of my life? And if it does, that's beautiful. They already have that curated. But if it doesn't, notice it and notice the impact that it may have on you after you see someone's story and then what you do in the markets. It's really important for you to observe yourself over upcoming week and how actually other people's stories and trades, although we don't know the risk behind those trades, will have an impact on you. We have Medahan saying stick to one strategy. Absolutely. And that is actually allowing for that one strategy to play over time. Only then you can decide whether it works or doesn't work. Yahya is saying, I've blown my trading accounts. I'm really sorry to hear that. And Yahya is saying it's because of the emotions. And you're not the first or the last trader, unfortunately, to experience that. But this is the reason why we are here and why we have those trading psychology series, because majority of the time, and I say every session, I will say again, majority of you already have a winning strategy. Come on, trading can be super simple. If you think about it, markets go either up or down. That's it. That is it. Up or down or consolidate. The market may consolidate. And you at random have 50-50 chance of actually making a profit. But with the knowledge of the strategy, you are building your numbers in your favor. So you have a higher probability of actually winning. It's never 100%, but the probability is higher. And it's all down to your psychology to just over time execute that probability for that probability to play in your favor. And the reason why we don't is because of psychology. And this is the reason why at Funding Pips we are doing these things, because we know we are traders and we know what it takes to be a successful trader, and that it all sits within our mind. Marahan is saying FOMO is like gambling, brain gets addicted. Absolutely. And this is the study that I had given you as an example. Literally our brain, during FOMO, our brain's area that gets more active is related to addiction and it's related to survival. Two kind of go hand in hand. I don't want to repeat the whole theory behind it, but after we finish this session, you will be able to rewatch and you can really pick out those parts. Chart Art says the neuroscience makes sense. Amazing trading is related to science. Of course, trading is related to science, because behind trading there are people, and we are science. You know, we are the most discovered and undiscovered creatures at the same time, but we all psychologists in our own way, and we all analyze, understand, put things into certain patterns in our brain, interpret things, and we are making lifetime discoveries as people, as traders especially as well. Okay, strongly agreed. Wow, I have a lot of positive comments. Thank you so much. We have someone saying, been trying to stay away from following social media gurus. Good. Don't try, just stay away. That's it. Other person is saying that it's in trading is always about wanting more. Absolutely. And this goes again from the study that we had mentioned during this webinar about that our brains see losses as more significant, and actually the winners do not give us such high satisfaction. Because if you think about it, at the start as a trader, you may think, oh, $100 a day, that would be so amazing, or per trade, if I win that, amazing. But then the appetite is growing and we want to achieve more and be more and, have higher aspirations, which is absolutely fine if it's done in a measured way. But if it's done in a way that is triggered by, oh, I saw someone else, they just made X amount of money and now I want to replicate their result, then of course that is not going to work. We have other people saying that they trade only selected pairs. That's amazing. That's what you should do as a trader. We have another person saying that we have great knowledge. Thank you so much. Then we have Mohammed saying, have a plan and trade with your plan. Absolutely. Roy says that he trades 4 pairs, Euro, USD, GBP, USD, oil, and gold. That's fantastic. That's a good amount. Other person, gold. Other person saying that they love the knowledge. We really love you too, that you are here and utilizing that knowledge. Then we have Chart saying your concentration is going to go down and your frustration is going to go up 100%. And this is where your decision making is going to be impaired. And this is where accounts get hurt. Domino FX stream is lagging. I'm sorry that the stream was lagging. Apologies for that. We have other comments about the session. I don't want to read out all of the comments around the session, but I want you to ask questions. So I'm scrolling down. Please ask me questions. We have so many comments. I actually love seeing that. So many comments. But I'm going to go with the questions. ask questions on YouTube live or on YouTube live. That would be ideal, actually. What beliefs do I need as a resources to be effective or create the conditions I want? The conditions this is a great question, actually. The conditions for you to create as a trader is the condition in your environment. You can only focus as a trader on what you can control. And what you can control as a trader is yourself and your physical environment. You can't control what's going to happen on the charts. You can't control what is going to happen in the economy. You can't control what President Trump is going to say. You can't control what is going to be a number during a red news folder. Those are things outside of your control, but you should build a condition around all of those variables, and you should understand how, for example, during first week of the month, before we have first red folder news, which is on non-farm payroll. I apologize. Non-farm payroll, first Friday of every single month. I know the markets are maybe a little bit undecisive, and I'm like, okay, that's fine. But there are other times when the markets are flowing beautifully until the data comes out. So then I participate. But what you have to do is you have to build your own conditions, okay? You have to build your environment and understand how to control your environment. i.e., if you take 3 losses, you need to know to remove yourself from your trading station, because after 3 losses, you usually may always overtrade. Or when you actually see someone posting something about certain trade or certain pair, do not get influenced by it. We all do. We all do, by the way. We will all get influenced. I get influenced sometimes when I see someone saying, oh yeah, I just exited Euro USD. From here, the price is going to turn around. But it's not in line with my analysis. My analysis say hold for longer. And what do? I start questioning myself. Should I do this? Should I do that? That's why I control my environment. I would not ask anyone any opinions about any pairs, about nothing at all to do with trading whilst I'm in a trade, because I need to execute on my trading idea and not have someone else responsible for my trading idea or make decisions that are actually not aligned with my trading plan, but influenced by my emotions. So it's just about the awareness. So those are the kind of things that you need to work on. In terms of the resources, please go and watch all of our trading psychology series and webinars from last year. Those are the places for you to go to, and building discipline into your life. There are just so many things you can do. But most of all, review your process and understand your process. Why you are entering trades the way you do, why you are analyzing the way you do, why you are using certain risk to reward ratio, certain risk, what is your winning streak, losing streak, what is your data. Get to know your trading style, your trading behaviors, and yourself as a person, because all of those things go hand in hand. It's not about just trading or just psychology. It's about trading psychology, it's about strategy, it's about risk management. This is the triangle of consistency, like we said before. Let me see. Sometimes I take a trade that I know is just an inducement because of Fomo, and which is bad. Okay, so if that is the case, you may kind of think, okay, is it a Fomo, or is it because you are scared of missing out on the move, which is fear of missing out? Enter with lower risk. That could be one of the solutions, because sometimes, it's so easy to say to someone, just don't enter. Of course, if I was just going not to enter, then I wouldn't. But the problem is that we do enter when we're not supposed to. Go with lower risk. If you think, okay, well, here we may actually, the price will go lower because this is unlikely to hold, there's some liquidity below, or whatever that might be, then please essentially just lower your risk and observe what is going on. Let's see more questions. Roy, I'm trading from 2021 and learned one thing: simple things work in the market. Don't complicate it with strategies. I couldn't agree more. This is absolutely amazing. And I've got another question. Do novice and experienced traders differ psychologically in their response to market uncertainty? If so, how? Absolutely. Experienced trader is going to have the experience of the novice trader. Therefore, they made a lot of mistakes. They have gone through that journey of psychologically and emotionally it being demanding. Okay, so then when you're an experienced trader, you will know if there is a market uncertainty or there is big data coming out due to red folding news, or we had ECB, or we had FOMC data coming out. It's too best to stay away from the markets because of, for example, lack of decision, or at least when you do enter the market, I was still trading, I was conscious of the risk that I was taking. So it's just more about awareness and understanding why you're taking the risk. Because very often I feel traders take the risk for the sake of taking the risk and because it's convenient to press buy and sell. But actually, you should understand the risk that you are taking, because every trade will have different probability. A little bit more in your favor, less in your favor. And this is kind of the awareness that you have to have about the markets. And then I've got someone saying, well, how can I remain more calm when trading? Why are you not calm? That's my question number one. How to get rid of bad trading habits like revenge trading. In order for you to improve your trading habits, you need to start building healthy habits, not trading habits, habits in your environment and in your life on a daily basis. So you need to be more in charge and in control of your daily habits and consciously participate in changing your habits on day-to-day life. And that is going to translate into the markets. And the reason why is because you are going to overall become more disciplined person. And when you become more disciplined person in life, you will become more disciplined person on the charts as well. Let me see. There are so many questions, guys. I love seeing so much activity. I have Shubham saying, I have a strategy, and if I be consistent, I can earn good returns from it. But my psychology is very bad. I do overtrading, do reversal trading. I'm making my trading unnecessary, emotionally stressful. So I would say stick to 3 trades per day, or 2 trades per day, or 1 trade per day, and really write out what is your strategy. And I would say, actually, and this is a great advice from one of my colleagues here, Funding Pips, print out all of your good trades and then look at them, print them out and look at them, feed yourself what a good trade looks like, and only look at those setups in the market. I do believe that you potentially are overexposing yourself in the markets. Okay, so you are actually spending too much time on the charts, and that is potentially causing you why you are overtrading, because it's too accessible. And when things are too accessible, this is when we engage in them. And this is just us humans being opportunistic. Okay, and this is the same. Let's say you are in a workplace, someone offers you chocolate. You only would eat that chocolate because it's there. Otherwise, you would never buy it. And it's the same kind of in the markets. If you are in front of the markets and you have your trading platform open, you are likely to engage in the markets and you are likely to execute on a trade. We have now Adam saying, you said to stay away from chart to control your psychology, but what if you're a full-time trader? How can we control psychology? And this is a very good question, but this is a question where rules need to come into play. At the moment, you are in a playground all the time and you are achieving nothing. So you are in a playground and you allow yourself to run wild, and essentially your trading has no procedure, no rules. And this is where you need to stick to the rules, not just entry models, not just exit models, but rules for you as a trader. How do you engage in your work as a trader? When do you start on the charts? When you walk away from the charts? When do you go and get yourself lunch? When you go and read a book and actually spend time on personal growth and personal development? You don't need to spend 24/7 on the charts. And like I said before, one of the reasons why traders became traders is to own their own time, but they had become prisoners to the charts and they overexposed all the time. So you need to build yourself rules, because only because you're a full-time trader does not mean you need to sit there from morning till evening. It's not necessary. You should be trading 1 trading session, and if you get no setups during your session, it's a no setup day, because that's absolutely fine. Trading is about taking profits, stop losses, and missed opportunities. or no opportunities. There will be no opportunities in the market sometimes. I've got another person saying, Sharif trading. My biggest weakness is holding trades into like 1 to 3 profits and expecting it to go higher until it goes against me. How can I teach my brain to be happy with the profits? Very good question, and relatable to what we were discussing about the satisfaction and lack of satisfaction of profits. I would say to you this, you have to obviously introduce management of yourself and of your trades and of your expectations. Either you can say to, and this is why pre-planning is so important, but you could potentially say to yourself, okay, when the price reaches 1 to 3, I am going to close 80% of this position and leave 20% running for higher targets, but also define what is that higher target. You could also trail your stop loss to 1 to 3 and for the price to go higher. But most importantly, you should understand, why did you choose the 1 to 3 risk to reward ratio? Is it statistically performing well? And if that is the case, you should trust it. But I don't think you trust your 1 to 3 choice. I think you're doing it because potentially someone told you to do it, and you don't understand the reasons behind it and why 1 to 3. Because, for example, I would tell you one thing: I never know what I'm going to take out of the market. 1 to 3, 1 to 2. I don't have defined risk to reward ratio. I take from the markets what the markets will give me. So when I enter at a certain level, there is another level that the markets are going to react to. I don't know what that reaction is going to be. Is it going to be minimal, or is it going to be quite aggressive? So usually when the price gets to an area when there is going to be a reaction, I will be out of that trade, and I will either take the full position or I will take majority and leave the rest at break even. Let's see what is next. Even Sir Isaac Newton used to trade with Fomo and he lost a huge chunk of his wealth. Okay. Okay, I've got another one. I have a strategy, and if I be consistent, I can earn good returns from it. But my psychology is very bad. I do overtrading. I think we already answered that question. Let's see, there is Roy saying, Paulina, you missed my question. I'm sorry, Roy. Please answer again. Ask again. Guys, if I won't be able to answer all of your questions, because there are actually so many, which I'm extremely happy about, then we are going to answer them on YouTube. Now, I'm going to go through the questions, but now I'm going to tell you how the giveaway is going to happen. So whether you are watching us on X, on YouTube, or Instagram, you can enter the giveaway challenge. Okay, so we will be giving out 5 10K challenge accounts. Now, how you can enter the giveaway is to do the following. Listen to the instructions. After we finish this live, you go to Funding Pips and Funding Pips YouTube channel, and under the live tab, this session is going to be there and available to rewatch. I want you to go to the comments section and write what you like the most about this session. Which part of the session you like the most? And in your comment, leave your email. On Monday, I'm going to go through all of the comments and pick the best 5 comments and announce it on our Instagram stories. And then we will contact you through your email. So I'm going to repeat the rules, of course. So to win one of the 5 10K challenge accounts, after this session, on our YouTube channel, Funding Pips YouTube channel, go to the live tab, and this is when this session is going to be saved for you to rewatch, and then comment under the session and tell me what was your favorite part of this session, and include the email in your comment. On Monday, at the end of the day, I'm going to announce the best winner. I will personally go through the comments, and the best comment will win. Are the rules clear? Instagram, X, YouTube, are the rules clear? How to enter the one of the 5 10K challenges? Yeah, you go to the YouTube, Funding Pips YouTube, and you are going to the live tab to this session and enter in the comments, what did you love the most about this session in a comment section. On Monday, personally, you have the whole weekend to enter. You don't need to rush. Doesn't matter who's first, who's last. The best 5 comments will win. And I will announce them on Instagram. Please leave your email address in your comment and we are going to contact you. Okay? Now, let me see. I'm still here. If you need me to repeat anything at all, I will do that. Let me just look at if there are any questions here. I have a question from Instagram. Does staying away from the charts help in getting rid of FOMO? Absolutely. It 100% helps because you are not going to overexpose yourself to an environment. The more you would look at the charts when they are not your setups, you are more likely to enter a trade without there being a trade. Okay. So thank you so much. Comment on YouTube. Yes. So we have now, subscribe to our YouTube channel, subscribe to our YouTube channel, and go into funding pits, YouTube. Okay. Live tab, this session, go to the comments section and tell us what you loved the most about this session. You have time over the weekend, and on Monday I will personally pick 5 people who won based on the best comments. I've got a lovely message. I think I actually spend too much time on social media and watching charts full day. That's why I guess is the reason. You're really on point. Thank you. You're very welcome. Thank you guys so much. I was pleased to be here. I was pleased to see you all here. Thank you for your amazing questions. Thank you for attending. And I have seen some of you being here regularly. And I also know for a fact, because you told me that your trading improved since you started attending those sessions. So I'm really happy that we can help and that we can be here for you traders. So it's absolutely phenomenal. All right, so traders, thank you so much for your attendance. Next Friday, we are going to be here again. Okay, and we are going to discuss further topics on trading psychology. And on Mondays on our Discord, in Trading Psychology Corner at 6 p.m. Dubai time, you can come in and type in the channel any question. I'll be available for an hour every Monday. I am at 6 p.m. on Discord, Trading Psychology Corner. You ask me anything and I answer your questions. I will love you and leave you, traders. It's been a pleasure to be here with you, and have a fantastic weekend. Take care. Bye-bye.